Good morning, traders. It is Monday, the 11th of January, 2016. It's 8:01 a.m. Chicago time. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance not indicative of future results. Very wide range overnight. 35 points in ES overnight. That is a more than two standard deviations of range in that product going back 1,400 days. Um, The rising threat of China's deflation has translated into record lows for some key commodity currencies. China's December PPI year on year came in at negative 5.9% versus negative 5.8%. This is the 46th consecutive month of decline. China's CPI year on year came in at 1.6% in line. It's a 3-month high. The 2015 CPI was at 1.4%, a 6-year low. Below 2% in 2014, 3% was the official target. The bottom line is China's growth is slowing down. Its population is aging. Its debt, which is around $28 trillion, is getting worse, and its central bank is running out of monetary weapons to fight those issues. The structure in China is very complicated given the combination of state versus private-owned enterprises. The bulk of ownership is state ownership. The number of entities, public and private, that are loss-making or losing money has increased 10% at the state level in the last 4 years, and about 5% in the private sector, which again is much, much smaller. Shanghai's composite fell 5.3% early last night, bringing its year-to-date loss to 14.8% in the last week. Beijing moved to strengthen the yuan by pegging it to 6.5626 yuan per dollar. That caused a small bounce in the product, in the currency, as the market sees the government intervening. WTI is down approximately 11% so far this year. It managed to avoid putting in a lower low this morning than the one put in last Thursday, which is a 7 or 8 year low, I forget which. Also, something to note, earnings kick in today with Alcoa expected to earn 2 cents per share on revenues of $5.3 billion. As far as what's on deck for today, at 11:40 a.m., 12:40 p.m. Eastern, 11:40 a.m. Chicago time, we're looking for Fed Speaker Lockhart on U.S. economic outlook in Atlanta. And then there's nothing else really at about 4:50 p.m. or 5:50 p.m. Eastern. We're looking for Fed Speaker Kaplan, who's also non-voting on the economy and monetary policy in Dallas. There is nothing else on deck for today. Also, today is the day after non-farm payrolls. Traditionally, this is more of a lazy day, very, very quiet. We'll see what we have, though, with the range as wide as it's been. We'll look at the technicals here in a minute. Because it's Tuesday, let's go over what we're looking for the week. Tomorrow, UK industrial production, manufacturing production, Fed's lacquer. Wednesday, Eurozone industrial production, U.S. monthly budget statement, Beige Book, and Fed's Rosengren and Evans. Thursday, German GDP, UK Bank of England rates, U.S. initial jobless claims and import prices, ECB policy meeting, and Fed's Bullard on Thursday. Friday, construction output in the UK, trade balance in the Eurozone, and the U.S. has retail sales, Empire Manufacturing, PPI, industrial production, University of Michigan, business inventories, and Fed's Dudley. Very busy Friday and Thursday. Thursday, of course, with the BOE and ECB meetings. Let's switch gears now to the technical picture. There we go. So here's my overnight chart, as with the dark background. I've changed the. In fact, let's change this darker. I've changed the value area to white. I've changed the value area to white so we can see how value has been migrating. The blue profiles, the profiles with the blue, like this one here, is the overnight. The profiles with a light gray are day session. So looking at what we've done in the last few sessions, let me clean this chart up here in a second. Here we go. So when we look at what's been going on, oops. What's been going on, you could see that as we started to approach 2075 here at the end of December, the range was quite normal for day session, overnight, very quiet sessions. And then what ended up happening as we got into the last couple of days of trading in December, the range overnight expanded with the 31st. It expanded, and you could see the range expansion. These boxes get wide compared to these, so you could see that these boxes are fairly small. Again, these are the holidays, but even if we avoid the holidays, these boxes are fairly small, and then all of a sudden, these boxes get very wide with the action that's going on in China. So as the range continues to expand lower, so does the delta, or the difference between traders hitting the bid versus lifting the offer. A lot of volume coming in on the sell side. On the buy side, like days, for example, days like this day here, the last day of the year, we had a strong rally. We still get the pretty decent delta going up, but nowhere close to selling delta, and the market continues to operate in that way. It's not able to find it's not able to find a base of buyers yet. News flow is pretty poor still, but overnight, as we zoom in here, overnight you see us opening right outside of the low of Friday, and making a push lower to 1893.50. So we got below the 1900 century figure. We bounce back up to 1908, pull back, and then we push with nothing really picking up until the European Open. So right now we have a very, very weak high. Double top at 28.50 with lots of volume going off at the top. It looks like the overnight high is vulnerable this morning. The cutoff point is around 1913 right here for the bulls. 1 second. So looking at the way things are shaping up for today, let's step back for a moment and look at the composite chart. This is a chart of our day session only. Each bar represents a day. And you can see that we fell off the balance that we've had up here since October 23rd. We've traded this balance for quite some time, and we fell out of it last week. On Friday, the key thing that it accomplished is it tested this point of control, this MC point of control below us. This area here, this balance that we had here, was from the August correction, the big volatility days that we had in August. And then we ended up balancing out. Let me push this profile to the back so you can see the bars. And then the market ended up dropping and then pushing up to 2004, making a higher low, and then shooting up all the way up to 2100 or so. and then balancing out for the month of October, and then we finally fell through. And these are the last 2 days we have tested. We have now tested the point of control from above. We have pushed through down just below this high volume node right here. This high volume node is at 1900. The next high volume node is the point of control, and then above that is this 1953.50, which coincides with Friday's high, and that's where we are today. So today we are basically trading inside of Friday's range, and it looks like it's opening right against the value low of Friday. And so the idea for today is that it is likely, chances are, this overnight high at 28.50 will get tested. That's the probability. The expectation is that we're likely to get responsive, fight it out. I doubt that we will get to the close of Friday, although we have been closing the closes on the downside. Like on Friday, the game plan was for a test of 1940, balancing out, and then possibly pushing up higher as the market gets exhausted of selling. It was showing signs of exhaustion the day before. Also, the statistics, the probabilities of continued lower lows are diminishing at this point. So I'm looking for it to try lower. So I'm looking for responsive selling towards that 1915 area. I'm looking for it to balance, and I'm looking for this overnight high to be taken out. Whether it gets responsive selling immediately on the open, or or it pushes up and takes out 1928, flutters around, and then starts to come back down. Those tell us two different things. The expectation, the higher probability, is for responsive on the open, balancing out, and then to take out the 2850 to get our overnight stat completed. If you recall, the probability of the market taking out the overnight high or low, high or low, I have to emphasize the the or, is 97%. So, with that being said, that's what I'm expecting to be the first hypothesis, the primary hypothesis. The secondary hypothesis is we do find buyers early, we take out the overnight high, we push through, and then we start to pull back and move towards yesterday's close. This is a more bearish scenario. That's hypothesis number 2. Anyway, that's how things are shaping up. A quick look at crude oil. Crude is trying incredibly hard to find a base. There was a release by Shell's CEO overnight that that basically stated that the prices of oil are not likely to hang out here much longer. So overall, they're stating that the price of the commodity that they deal with is not likely to remain at these prices, even though his financial officer said that I think it was last week or something, said that it could drop to 20. It could drop to $20 a barrel. So I think he's trying to do some damage control there. But overall, oil has been balancing now for 3 days, including today. Here's your balance zone. We have 2 days of balance here, so these 2 days can be profiled together so we can see what the overall auction is. Let me get that up here. So here's the 2 sessions profiled together, and there's your balance point. Looks like right here 33.10 is likely to be the balance point. The high overnight is 33.20, tested it by 10 ticks. It is basing below. The profile is being built below balance. I expect that crude oil is likely to push through again, pull back, bounce around here in the 33.10 area, and start to drift up. The target for crude oil above the immediate target's 35.31, which is where the initial string of initial string of low volume starts from right up here. So that's what I'm expecting for crude oil. I'll leave you with that. Hopefully you've gained something from this. I will catch you tomorrow. It's a good day to just again chill out and let the market do its thing at the beginning. The highest number of wide rotations occurs at the open. And so you experience the highest amount of volatility. If you're trading a smaller account, it is highly, highly advisable to wait out the first 20 minutes to half hour. Let the market decide what it wants to do, and then start stalking your trades. Good luck, and I'll catch you tomorrow. Take care. Oh, by the way, there's a public AMA on Thursday at noon this week. This Thursday, I'll create the event for it. You'll be notified if you're on the futurestrader71.com list. Otherwise, you'll see it on Twitter. I'll catch you on Thursday, and of course, I'll catch you every day this week for the Trader Bite in the morning. Take care.